commentary for Friday, the 26th of July, and incorporating a little bit of weekend crypto action for those of you so inclined. So, the end of the week, what does it bring? Well, Friday brought a fairly subdued start across all markets. Crypto saw Bitcoin really glued to the $10,000 level, which seemed happy just to dance around either side of it without any great direction. And ETH happy to trade 218, 220. Not much else to tell about Friday, really, from a crypto perspective. The weekend, as usual, will be a different story. Got the usual shenanigans with liquidity. And halfway through Saturday, we see a very sudden drop across the board in crypto. Hard to say why, and kind of hard to say which coin led the way. But ETH dropped from 220 down to 202, and Bitcoin, which was probably the leader, dropped from 10,100 down to 93.50. Much of the move happened in the space of less than 30 minutes. All I can do is put it down to the usual heavy hitter, or whale as we like to call it in the crypto world, to move the market. Didn't do much really other than just highlight the lack of liquidity in these markets, especially at the weekend, and the struggle crypto is currently having to get back to the highs from June. It'll be interesting to see whether we get any follow through to the weekend move as we head into Monday. As for FX and equities and commodities, other markets, start Friday, everyone's still really digesting Thursday's ECB rate announcement and the press conference and all the information that kind of came with it. At the end of the day, the dollar was probably the main beneficiary from Thursday, although somewhat ironically less so against the euro. Friday, that theme would continue. Dollar yen edge up to 108.80, euro slip back down to 111.30, and cable back to 124.15 as the day begins. Also heading lower was Aussie, trading down to 69.20. All eyes would be on the US Q2 GDP data, which ended up coming in a little better than expected at plus 2.1%, but still well below the 3% that Mr. Trump touted as his target. But nonetheless, the dollar catches a few more points, but is a little reluctant to do too much more before the end of the week. US equity futures pointed to a higher open, helped more by strong earning results from the likes of McDonald's and Alphabet than anything else. And so the trend will continue for the day. The dollar making more gains, with cable dropping down to 123.76, Aussie to 69.02, and euro down towards 111.10. The latter, it feels like it's only a matter of time before that gets tested and possibly broken, as that is kind of the last line in the sand, if you like. Equities spent most of the day rallying and closed at their highs, with the S&P and Nasdaq both closing at record highs. The one item of interest I did see on Friday, came very late in the day, was a headline that President Trump had met with his advisors to discuss possibly intervening to weaken the dollar. We've heard him jawbone a lot about other countries keeping their currencies artificially weak. Europe is certainly coming for a bit of criticism there, and we know the Chinese have also. It appears the overwhelming sentiment from his advisors was not to act and to allow the markets to determine the value. However, on Saturday, President Trump countered this by saying, "I didn't say I'm not going to do something on the dollar." So, watch this space. Keep an eye out for further headlines on the subject. Intervention is really pretty. And from my experience of almost 30 years in the FX markets, it really works in the long term. Just go and ask the good folks at the Swiss National Bank. It can have a temporary short-term effect, but the long term, it really works. So be interesting to see what happens and what comes out of that. Moving on to a little bit of technical analysis to end the week, or begin it, I guess, if you're going to be reading this on Monday morning. I want to take a quick look at the Aussie against the US. We had several attempts here. I've got a 2-hour chart up. I just did that really to just highlight some of this stuff at the beginning of the year. But as you can see recently, in late June into July, we've had 1, 2, 3, 4 good attempts to rally over 70 cents, and we have failed miserably to hold and even in the light of an expected Fed rate cut next week, the dollar has probably strengthened over that period of time, and the Aussie has certainly suffered as much as any. And we can see here we closed Friday right on support at just above 69 cents. We're just opening a fraction higher on Sunday night, maybe 69.10. But that's a very important support level. Below there, we've got 68.30, which was the low going back to the middle of June. And then you really have to go back to the beginning of the year to a very tentative line of support at 67.37, which was from the January flash crash. For those of you who remember it, you can see from that line, it was very, very quick in early Asian hours, down and back up. So I wouldn't personally pay a lot of credence to that. Below there, a lot of fresh air. So all eyes this week on the Fed and the reaction to the dollar, from not only what they do, but also obviously what they say. Going to be a very, very interesting week for the FX markets. With that, I wish you all the very best of luck, and I look forward to speaking with you tomorrow. Cheers.